Hello everyone, this is Santosh Nadigar, founder of Fortune Maker, business partner with IFL Securities. Why Indian markets have hit all-time high despite COVID, lockdown and a record slowdown? Yes, equity markets have made a remarkable comeback post the gloom of COVID-19 lockdown, aided by huge liquidity and lower interest rates. One of the important things that has happened in the last 6 to 7 months since March is that the global economy has given a stimulus to the tune of $8 trillion, and this money has entered into every economy and every asset class. India has become a more favorable destination to the most people in the world. With a variety of reforms that the country has been carrying out, India has been more favorable than China. Now, let us look at the factors that have supported for the up move in the index. The most prominent one, vaccine development. The consistent positive development on the vaccine front has clearly boosted the sentiments across the globe and has raised hopes for early vaccine for COVID-19 than later. The global equity markets have climbed higher after the vaccine development, especially when the second wave of COVID-19 hit the Western countries hard. The next one, FI inflows. The foreign institutional investors continue to pour money into Indian equities with a hope that India is on a strong recovery path than others. When I really talk about sectorial rally, yes, banking and financials, metals and auto stocks have supported the market to hit a fresh record high. In fact, the bank nifty is still away from 52-week high. What's ahead? The approval and gradual distribution of COVID-19 vaccine will be the major obsession in the early and mid-2021. Will really the vaccine work as advertised? Will they be rapidly distributed around the country and around the world? Yes, there will be inevitable hiccups. But at the same time, markets will be watching for the government to pass additional stimulus to provide a lifeline for small businesses and consumers until the vaccines really start to slow the spread of the virus. How quickly the pandemic fades will have enormous economic impacts, and this is going to hit every single investment sector. COVID-19 vaccines will definitely boost pharmaceutical stocks. If the pharmaceutical company manages to get COVID-19 under control, all the companies involved in this effort will be handsomely rewarded. Plenty of other sectors are set to jump if the world starts returning to normal in 2021. Pent-up demand for travel could drive a gold rush for long punished airline, tourism and hotel stocks, and all that economic related activities will do wonders for the hard-hit tourist cities around the country and around the world too. On the other hand, plenty of firms saw a surprising gain in 2020 might be imperiled by a potential return to normalcy after COVID-19. If I have to give one such example, work from home darling Zoom nearly lost about 20% at one point of time after Pfizer's COVID vaccine trial. Yes, Zoom isn't going anywhere and neither is the work from home crowd. But that day should be a cautionary tale that the growth in this sector is probably entering into the new phase. New investing phases are normal. In stock markets, these are called as rotations. Money runs after gains in certain sectors until a rally, and this becomes exhausted and then the money runs into other sectors. There might be a slowdown in the tech stocks, which had an excellent year in 2021. The long bull market for tech stocks is bound to end eventually. Don't overreact to the news. Be ready for the unexpected. In a world where uncertainty is more a feature than a bug, it is important for one to be prepared for market highs and lows even within the span of the same year. One reality that I think investors need to be more comfortable with is increased volatility in their investment portfolios, while 2020 is an outlier in terms of wild ups and downs. Volatility is something every investor is going to have to get used to. To conclude, the best way for more investors to handle volatility is a diversification in the portfolio tailored to your goal timeline and risk tolerance. Thank you for watching. To get more updates on financial markets, please do subscribe to our channel. Stay safe, stay happy.